Thank you, Faizan. On behalf of Quantum Securities, we welcome you all to Q2 FY22 result conference call of Uflex Limited. We thank the management for giving us the opportunity to host this call. The management is represented by Mr. Rajesh Bhatia, the Group CFO, and Mr. Yusuf Nasrallah, Investor Relations. I now hand over the call to Mr. Yusuf Nasrallah. Over to you, Yusuf.
Thank you, Mr. Prashant Sharma. Good afternoon, everyone, and a festive season greetings. I would like to welcome you all to the second quarter FY22 earnings call of Uflex Limited. On the call today, we have a Group CFO, Mr. Rajesh Bhatia. Our discussions may include predictions, estimates, or other information that might be considered forward-looking. While these forward-looking statements represent our current judgment on what the future holds, they are subject to risks and uncertainties that can cause actual results to differ materially. You are cautioned not to place undue reliance on these forward-looking statements, which reflects our opinion only as on the date of this presentation. Please keep in mind that we are not obligating ourselves to revise the publicly released result of any revision to these forward-looking statements in light of the new information of future events. I would like to emphasize that while this call is open to all invitees, it may not be broadcasted or reproduced in any form or manner. Let me highlight a few achievements in this quarter. Uflex posted 36% year-on-year growth in net revenue at 3,036.2 crore Q2 FY22. EBITDA at 424.5 crore and PAT at 170.7 crore. We have also commissioned the greenfield of 45,000 MTA production capacity of our Bopit film manufacturing plant in Nigeria. Let me now hand over the call to Mr. Bhatia to throw some information on the quarter that under review. Over to you, sir.
Thank you, gentlemen. Thank you for taking your time out today in this festive season. And first of all, a very warm wishes to all of you on the call for the Diwali and Vishkarma, Govardhan Puja, Bhai Dooj. So for all the festivities. I know it's a bit tough for everybody to be taking time out of their schedules now and get on to this call. But because we didn't want to delay it any further after the results are there, so we just thought that we will still go ahead with this Concall and present our views on the highlights of the quarterly summary. Yes, as my colleague said that we achieved 36% almost top line increase, which is followed by 31.5% volume increase as well. So as we've been saying that the capacity being available from the newly commissioned capacity is now helping us in this buoyant market from the demand perspective, and happy to say that except Nigeria, all our newly installed capacities are now working at their full level of capacity. They worked at their full level of capacities in this quarter, and post this quarter also they continue to work at much higher capacity utilization levels. They'll be as we come out of their warranty periods, yes, the speeds for the machines will be increased and there'll be more throughput available for us to take. But as of now, what we have achieved is the rated capacity given to us by the suppliers in respect of all the plants except Nigeria. Nigeria is also operating at a quite high capacity utilization levels, about 70% or so. But I think for Nigeria to come to 100% level may take a quarter or maximum quarter and a half to two, because there are some logistical challenges over there which are resulting in some of the bottlenecks in terms of the logistics management. So we sorting that out, and so it's not a machine or a demand problem. It's more of a logistics issues in Nigeria, which has kept the utilization levels at a slightly lower level. But I'm hopeful that next 1 or 2 quarters at the best, we overcome those hurdles, and we'll start utilizing the full capacity, because the demand side, both on BOPP as well as on the BOPET, continues to be very strong. You would have seen otherwise, a 36% year-on-year volume growth, and even if we see on a Q&Q growth also, we are at about 10%. This is the first time ever that we crossed 3,000 crore revenue mark in a quarter, and we expect that we should be doing it consistently throughout the rest of the quarters in this year and subsequently. Another highlight for this quarter is a constant increase in the raw material prices, constant increase in the shipping costs, and some impact on the energy costs. So as a result of that, the margins have been affected a bit. In any case, as I've been saying earlier, that at a higher crude prices, the margins would even otherwise get impacted, because the top line additions does not necessarily mean that you are adding on to you are maintaining the same margins. So your margins are more or less fixed at dollar per ton or dollar per kg, whatever way you take it. And obviously, when the input prices are higher and your margins are fixed largely in the dollars per ton or per kg number, so they will look a bit subdued in the context of when you say the EBITDA margins to the sales. So if we negate that impact and all that, still the EBITDA margins are lower, but they are lower basically because of only one thing, that a constant increase in the raw material prices, both for the PET, the BOPET resin, as well as for the BOPP homopolymer. Just to give you an idea, in India, when we for the PET resin, we had almost close to about 70% increase in the cost of the raw material as compared to what we on a year-on-year basis. And there has been a quarter-on-quarter increases also. Homopolymer cost has gone up by about 30% on a year-on-year basis. And similarly, across all our offshore facilities also, the PET resin prices, which are used in the BOPET films, has gone up on the average by about 40%. And homopolymer is used only in Egypt and now in Hungary. So again, that's there's a firmness of the prices all throughout. And this time, the firmness in the prices have also been more consistent. Like if you have a price now and then, the next month it will be different. But, the trend in the quarter has been that, there have been frequent changes, which actually means that, the stronger the order book position that you are sitting on, and I've said that demand momentum was very high. So to service the same order, you are then buying the raw material at a higher cost. So while, from the sales team, it looks good that, you're sitting on such a huge order book, but, in a continuously rising the raw material prices, probably that is a bit counterproductive because you still continue to serve those orders at a higher input prices. But, this is, I would say, an aberration, and I don't think so this would be there beyond one or two quarters, including the one previous one. So once the stability returns on the pricing, obviously, the margin profile will definitely improve. Heartening is the revenue profile, which is both volumes of about 31.5% and value of about 36%, and that's what is the highlight for the quarter. And not only that, in some of the other businesses also, which are ancillary to our packaging business, like chemicals business, which comprises of inks, adhesives, and other stuff. So there also, the impact of the raw material prices over the previous years has been pretty hard, and so much so that the prices have gone up from for the various items from 25% to about almost about 100%. So such a volatility in the prices, is actually with a strong order book position has only worked on the wrong side for us in this quarter. And when I look at some of the competitor results which are out, or whether we call it FRF, they've also reported huge fall in EBITDA margins from roughly about 36% to about 20% on a standalone basis, and about 35% to 21% on a standalone for the quarter. So some of the other competitors who are there in the BOPP films, the price, their performance has been better because the BOPP price raw material rise has been much less as compared to the PET films resin price rise, as I explained, and there, the BOPP also the demand side continues to be extremely strong at this point in time. So yes, the advantages are that you have found a customer much earlier than what you had expected from your expansion projects. But yes, the margin profile till the last quarter was good. This quarter has been frequent changes in raw material with a strong order book position, which didn't help the cause. But hopefully, October is much better as compared to the whole of the last quarter, and hopefully with that will help us translate into better numbers. There are positive news that ICRA, who has been rating, India Ratings, who's been rating the company now for many years, they have given us a 2-notch upgrade, and our credit rating now stands at AA- level. Same as some of our competitors who were always 2 notches higher than us because of their smaller balance sheet profile. But I think we've been able to break that barrier now with them by showing such an exemplary performance that whatever was created in the last 1 year almost stands fully sold out. So that's where they've seen a strong business growth and have upgraded us by 2 notches to AA-. that's another feature, for the quarter. Nothing much to say on any of the other stuff because there are no new expansions. There is nothing much else happening. As and when we have anything on that, obviously we do come back to you, announce that whatever is required statutorily. But both India expansion of our aseptic packaging is on schedule. Our expansion in Dharpar for BOPET films as well as the CPP films is on the target, and our expansion in Dubai for the CPP films is again on the target, and we continue to make strides there. Packaging business per se again has been we would say has been a kind of bit not so good performance that the kind of volumes we wanted to have there, we are not able to show that kind of a performance in that segment, and that's why you see that there is no expansion of the business over there. And I saw for the second successive quarter a loss reported by one of the major competitors in the flexible packaging business, which clearly demonstrates that this is a particular business segment which is clearly struggling because of the demand and supply mismatch. But while we can take more tonnage, we don't want to be doing the things at a prices which are just to undercut somebody or just to get the a higher capacity utilization levels and all that. So we've taken that call and we said that look, we are not going to be getting into the mad race of cutting down the prices and winning the orders somehow. We want to do more of a value-added stuff and some of the higher margins business which others do not have because of their infrastructure limitations. So we happy doing that till the time we have this demand supply equilibrium sort of sorting out, and hopefully that business will also start to generate a higher margins in the quarters to come. After the completion of the Dharpar project, our total BOPET capacity should be close to about 400,000. Our BOPP capacity is now about 150,000, and after the expansion of CPP, we should be close to about 50,000 tons. CPP, both India, Egypt, and Dubai, at 3 locations. There has been some reduction of debt in this quarter. The term loans have been paid, so whatever is the structured repayment profile of those facilities, they are being paid according to that amortization schedule. That's in a nutshell, what explains about the quarter, and happy to have any questions, field any questions that you guys may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and one at this time. The first question is from the line of Yash Dantewadia from Maruti Securities. Please go ahead.
Hello, sir. I hope you're having a nice day. So I just have a couple of questions. I would also like to understand the revenue and the operating loss from Nigeria facility. Also, since you're doubling your aseptic packaging production capabilities, I want to understand what was this quarter's revenue from the aseptic packaging and the EBITDA from aseptic packaging. And also, why haven't we been able to pass on our rising input costs onto our clients, and will we be able to do so in the coming quarters if the input costs stay wherever they are from this quarter onwards? Also, the order book and the debt level, when can we expect it to stabilize and start coming down? Yeah, these are my questions.
Okay, so quite a few of them. So on Nigeria, I said, I can only give you the capacity utilization levels and the information that it's an EBITDA positive for Nigeria in this quarter.
It was EBITDA negative last quarter, right? If I'm not
wrong. It's an EBITDA positive this quarter. And the capacity utilization level has been around 70% this quarter for the Nigeria business.
Can I know what percentage of revenue comes from the Nigeria facility? Because you've invested $100 million there, right?
Yeah, so I don't think so that number is available with me right now.
Okay.
So in any case, we don't disclose in the quarterly that much of a number, but as I said, in one quarter or maximum 2 quarters, there also will be operating at a full capacity utilization level. So I think you can very well know that what kind of a numbers the top line we talking about over there.
Yes.
On the aseptic packaging, because this is not a peak quarter. The peak quarter for them is normally January, February, March, and April, May, June. So this is probably a bit lower quarter than then. But this time the second quarter for them was just 1 second.
Yeah, I would just like to understand the revenue and EBITDA from aseptic packaging. Since you are doubling the capacity here, I can come to an assumption of what kind of growth we'll see when the capacity.
So we said that we are looking at about 20% margins over there. So as compared to the Q1, where we had the capacity utilization of about 93% from that business. This quarter we had about 86%, 87-86%.
So we are doubling our capacity here, right? So I just wanted to understand what percentage of our revenue comes from the aseptic packaging. If you can give me a number.
No, I can not be able to share that right now, but offline we can probably do that. Aseptic packaging business also, you have to take it that whenever we talk of numbers there, we need to take into account the peaking capacity. And as I said, peaking happens from January to June, which is the summer period. And as the rains and the other things
I'm just trying to understand the size of the aseptic packaging unit in terms of your company's size. What percentage of your revenue comes from aseptic packaging, and since you're doubling the capacity, what kind of revenues can we see coming here?
So I think at a current capacity of 3.5 billion packs, we can look at about 600 crores of a top line from that business.
Yearly, right?
Yeah. At currency.
Yeah. So, what about the rising input costs? If the rising input costs stabilize here, will we be able to pass it on to our clients from the next quarter onwards?
So we are passing on the rising cost to the clients, but what happens is you pass on today, and by the time you have to deliver the same order, if you take an order today and you have to service that in 30 days time, and 30 days time there are 4 price rises. So obviously, you will always lag behind in terms of passing on to that. Yes, because of the strong demand side, there have been, it's not, very challenging to pass on those costs to the customer. But because of this frequent changes, the lag effect has increased a bit in this quarter. So what we are doing is now we restricting the order book to a much lesser period than we earlier used to do, so that we know that if we were earlier taking the 30 to 60 days kind of orders also, so now we love to do only about a week, 10 days kind of an ordering, so that we know that as to what are we committing ourselves to.
Do we not have any way of hedging our input costs?
No, we don't have.
Okay, I would just like to know the current cash and the current debt levels.
So as on 30th September, the term debt is about 3,165 crores. And the working capital has gone up a bit because, as I said, that there has been a increase in the raw material prices, which means more working capital is but still on a net current assets basis, we manage it well by having incremental liabilities also. So overall, the net impact of the working capital is within 100 CR only. But obviously, the working capital, whatever are the cash earnings from the business, we've deployed in the working capital. And we have tried to bring the working capital levels down to as less as possible. So today, if on an overall basis we talk about, I think not more than 40% of our working capital facilities are used on a company-wide basis. So there is enough liquidity, both in terms of your higher utilization of the working capital possible, and also wherever there are opportunities to there are no opportunities to lower your working capital. So we keep on investing money in the very short-term maturity government securities in
that's why I would like to get your net cash level on your books, cash and cash equivalents.
Cash and cash equivalents.
That you've invested, the money that you've invested, other than the working capital, that you've invested into short-term and long-term debt instruments.
We'll have to give you that offline.
Okay. Also, what is our interest cost right now? If you can give me a figure in terms of percentage.
Interest costs, now what we borrowed in India are sub 7%. And in foreign, it depends on the jurisdiction to jurisdiction, but again, very competitive at not more than LIBOR plus 2%.
So after we got in ratings upgrade, are we expecting the cost to come down, right?
Obviously, yes, definitely.
Yeah, and also my last question. I'm sorry for taking your time, but I didn't get an opportunity the last con call. So going ahead, what kind of margins are we projecting from this quarter onwards? If you can give me a figure.
No, we are not. Very difficult to predict at this point in time.
Are we seeing any
raw material
improvement?
pricing?
At least if you can,
I can say that October is much better than the previous quarter.
Okay. Thank you so much for your time, Mr. Rajesh Bhatia. It was very nice talking to you. Also, I would like to get the other answers offline if possible. Okay. Thank you.
Thank you. The next question is from the line of Prashant Sharma from Quantum Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. Sir, in your press release, you have said that the high raw material prices, shipping and energy costs led to the decline in margin. Sir, this is regarding the shipping cost. Are you, facing any difficulty in procuring the raw material? And how much of your raw material is imported right now?
So in India, we import, the homopolymer, which is used in the BOPP. That's what we do. But across other locations also, there is some shipping involved, both from a raw material as well as for your material being sold in the different jurisdictions. Like if Egypt is exporting to Europe or some of the other countries are exporting into America, I think the shipping cost everywhere is affected, both for the prices increase on a YOY basis is at least 5 to 6 times there also. And this quarter also there has been no respite from increasing shipping costs. So everything is sort of adding on to the cost. And I see across the industry this quarter that the cost inflation has affected everybody in this.
But so you didn't lose any.
In our industry, as I said that the demand momentum was strong and we were able to pass on the costs. So it's not that we are not able to pass on the costs. But I do it today, and by the time I go to the market again, if there is a rise again, then the orders which I have already taken, I can't renegotiate prices on that. No.
Right.
Those still have to be serviced. So that's the only thing. So hopefully, that's a passing thing in the last quarter only, and there are the price rises are not so frequent. If we have a monthly sort of a price rise, it's much easier to handle rather than a weekly price rise.
Right. And we have ample inventory, sir, to so we do not lose any sales due to the shipping issues that the world is facing right now.
No. We're not losing any tons to that so far. But the raw material availability continues to be tight, and as we said on our earlier calls, our global footprint gives us that flexibility that we can move material from any part of the world to wherever there is a deficiency. Yes, today that will come at a slightly higher cost. That flexibility will cost you slightly higher, but will ensure that your fire is burning.
Okay. So, see, our sales volume went up by 31.5%, whereas the net revenue was up by 36%. So there is an increase in realization. So what do you attribute to this increase in realization, sir?
Cost increases.
Okay, cost increases. And there is no favorable revenue mix that we have?
So the margins were healthy only in the previous quarters also.
Yeah.
So I think when the raw material prices started going up, the selling prices had still a lot of catching to do. So typically what happens in an industry is when the raw material prices start to rise, people just don't, start passing on those prices to the market immediately. They wait for a while, for a fortnight or so before, those prices are passed on. But, in our industry, given the strong demand momentum, we were able to do that, almost instantaneously. But again, to repeat what I said, what hurt us was a constant increase in the raw material prices and not the increase in the raw material prices.
Okay. Yeah. Yeah. Thank you, sir. That's all from my side.
Thank you. The next question is from the line of Saurabh Sharma, individual investor. Please go ahead.
Hello. Good evening, Bhatia-ji, and season's greetings to you. You can hear me, right?
Yeah, I can hear you, sir.
Great. So, my first little request would be to, sir, for your investor relations team to check whether the earnings Concall notification is posted correctly on the website of exchanges, because this particular conference call's notification was not posted on the exchanges. It was only on the website. So that is one small request. And now coming to the first question of mine. Congratulations, by the way, on the volume increase. It's quite commendable how the capacities have been ramped up. But, the raw material increase was expected, I believe, in the result. But what really set off the decline in stock price yesterday on a trading day, no less, first of all, was, I believe, the other expenses. And they have been a point of contention for quite some time now, sir. Even in the last September 20 quarter, there was a write-off, I believe, of about 100 crores. There was receivables write-off, and there was some recoverables write-off, combined of 100 crores. Despite of that write-off in the YOY quarter, the other expenses have gone up quite substantially. Around more than around 15%, the other expenses have gone up. 10% around the expenses have gone up. And if you take out the effect of that write-off in the September 2020 quarter, the other expenses have gone up by 50%. And that, I believe, is the core of the matter. Could you please explain why these other expenses have gone up so much? Shipping should not be a major problem for a company like Uflex. Primarily because one of our USPs, sir, is that you are closer to customers. So compared to competitors, your shipping costs should not be affecting Uflex particularly as much as
other expenses increase. If I see correctly, last quarter versus this quarter, they are in line with our, the revenue and the volume.
Last quarter there were exceptional expenses for Nigeria.
Exceptional expenses for Nigeria means?
In the Nigeria plant, there were some EBITDA losses, and they were included in other expenses, as you had explained in the conference call.
No. EBITDA losses are never included in other expenses, no?
They are there in the other expenses, sir. EBITDA losses are also in the other expenses.
But the other expenses of 341 crores in the last quarter and 392 crores in the current quarter, they are in line with the increased volumes and the increased revenues of the company. There are no surprises which I have to
you look at the other expenses of the March quarter, in which the production was 125,000 tons. You look at the other expenses of March quarter, they were at 288. And they're at 392 right now. I have the results right in front of me, sir. I
don't have to. So the message that I am giving you is that there is no cause for concern for us on any of the expenses side other than the raw material cost and the shipping cost. All other expenses are well within control, and there's nothing that raises their eyebrows from a management perspective for any of these things.
So you're in a nutshell, you're saying that there are no one-time expenses for this quarter, and this level of expense.
No.
This same level of expense is expected to carry forward from here on.
Yes.
Right. So okay. So
there are no one-offs.
So does that mean that your EBITDA expectation, your PAT expectation, which you had outlined at the beginning of this financial year, you had outlined around 10,000 crores revenue, which probably is going to be accomplished, but you had also said a 1,000 crore PAT number, that is going to be difficult to achieve?
So very difficult to say at this point in time. I think that the 1,000 crore PAT one, we never guided anybody to that. I think we've always talked about EBITDA. PAT is for you to say, but even if I look at the first 2 quarters, if we are looking at about 435 crores, I think there's still ways to catch up to 1,000 crores. I don't think so there's anything will be far off on that number.
And so my second question is about the balance sheet. So in the balance sheet for this quarter, there is an increase in current assets, and a substantial increase in receivables and inventories is understood because of the new plant and new capacities coming online. But there's an increase of 200 crores in other current assets. And going back in the past of Uflex, there have been these property investments, the UTech developers transaction that was made, and I wanted to ensure that this other financial asset increase of 200 odd crores, it's there in the cash flow also. There is I believe, if I can check, there is a 258 crores negative cash flow for other current financial assets. So what is this comprising of? And this number has actually increased quite substantially over the past 18 months now. It started at around 300 crores.
So 70%, as I said, on a YOY basis, there is a 70% cost increase in your input costs. There is a 30% cost increase in the BOPP. So obviously the working capital deployment has increased. But when I see, on the net current assets deployment, as a whole, I think we are on that basis within 100 crore number when I see the net working capital deployment. There are no other investments into any of the non-related business or any loans and advances to anybody. There may be some investments in some of the businesses for any short-term instruments that they may have made, in Egypt, like, they're about $20 million invested in some treasury bills of the government, issued by the government of Egypt. But that is more as a liquidity management thing and not as any long-term strategic investment. So they will, as and when they will require liquidity, they will offload. They'll sell off those bonds and realize their working capital. So
okay.
That's
okay. And so on the debt servicing front, I realize your rating has been upgraded to AA-. That will only affect the interest costs for India. Your interest costs abroad are, of course, going to remain the same.
No,
right?
it's not going to impact the interest cost abroad.
Right, and most of your debt is outside.
Yeah. No, India also, we have about term debt of about close to about 900 crores. So, but and then there is a debt of there's a working capital of about 400 crores. So I think those will get better priced.
So the 7% that you mentioned, that is after the AA- re-rating?
No, that was before that. That was before.
Right. Okay.
AA- is only last 1 week kind of thing.
Right. So, but on the debt servicing front, do you see Uflex being comfortable going forward, because your EBITDA has reduced now, and being CFO, you would of course want to plan for contingencies, and going further, anything can happen really with raw material prices, other costs also. So, do you are there any contingency plans for debt servicing, because in terms of comfort for the company?
No, there's enough comfort. There's enough comfort. Uflex undrawn lines as well as the liquidity would today sit on more than 1,000 crores cash. There are absolutely no issues.
Right. And so my last question, I'm really sorry for extending my set of questions, but so what Uflex has increased its capacity by around 40,000 metric ton per quarter. So that amounts to around 4 lines, in a year. It amounts to 4 lines, and all of them have come up under operation in the past 1 year. We've seen in BOPP things have not been affected by as much as in BOPET. Do you believe that, all of the additional capacity that Uflex has put up, that has been weighing on the margins, and that is actually the reason why PET film margins have been low? And if, let's say, you were to go slow on capacity utilization, if you were not to flood the market with product at the present moment, but if you were to stagger your production increases over a few quarters, this impact on PET film prices is going to be lessened?
No, I think that's a very far-fetched imagination.
Because it hasn't happened with BOPP, sir. One of the only BOPP only producers.
We have the whatever expansion we've done on the BOPP side, the same numbers we've done on the PET side also. It's not that the PET is more and the other one is less.
Okay.
It's the same.
Right. Okay. All right, sir. Take it. Thank you. Thanks a lot, sir. Thank you for taking time out.
Rather for us, PET, we are more known for PET rather than for BOPP internationally, because before this expansion, we had just one line in in Egypt for our BOPP business, and but with the new line in Hungary and Egypt expansion, so it's the BOPP capacity which got added, and obviously. Because we were known more for our PET play rather than our BOPP play. What has been admirable is that, you've sold out those additional BOPP capacities so fast. Yes, the market has also supported us, but still in terms of, making new customers and everything, things take time, but fortunately, a buoyant market has helped us, and both the plants today are operating at their full capacity levels. On the PET side, we just added 2 lines, one in Nigeria and another in Poland, and I don't think so. We've flooded the market more than So I really don't think so. There is anything in...
How much capacity additions do you see coming up in this year? Of course, in FY23 there are quite a few capacity additions, including your own. But in this year, how many capacity additions in at least the next 12 months?
This year it does not look that there'll be any challenges. But yes, next year you will have some of the new capacities coming in. But unfortunately or unfortunately, the raw material side is also getting tight. So for some of these new capacities, as we stand today, tying up the raw material is not going to be very easy.
Okay. And are you seeing any old capacity?
I think we'll have to wait and watch and see as to what happens. But raw material, even availability is the kind of new challenge dimension that we are seeing.
So with regard to the difference in prices between BOPP and BOPET films, we've seen that BOPET films are actually now are comparable in price to BOPP, while traditionally BOPP is cheaper. So is there a possibility of replacement of BOPP uses being met with BOPET uses because of pricing?
Hota rehta hai, but that still takes a longer time frame. Because some of the large companies just do not, for changing their structure, For them, it's a bit long drawn process and not so easy.
Right. But it is possible if there is a long-term structural change.
Yeah. People do switch over. Yes, people do switch
Right. Okay. All right, sir. Great. Thanks a lot. Thank you. Have all the very best.
Thank you. The next question is from the line of Kaushik Poddar from KB Capital Markets. Please go ahead.
Yeah. See, so far your investment has mostly been in big capacity and all these things. Now, every quarter you come out with another press release saying that these are the new innovations you have carried out in various kind of packaging type of things. In the current quarter, in the last quarter, for example, along with the press release, you have also released, there is one more press release about the aseptic packaging. So can we take it that from now onwards your focus will more be on such kind of innovative packaging products which can hopefully give you higher margin rather than on putting up capacity?
I think both the things go simultaneously. We have to be innovative in our business. There's no doubt about that. We have to be ahead of the competition, and that is where your customer also respects you. And he does not think that you're the kind of the company who will only. So they know that they can turn up to you in case of any contingencies in the availability of a particular material, particular structure, and all that. I think both are two separate things. As you would have seen now, if this capacity expansion was not there, we wouldn't have been looking at a 3,000 crore top line number and a much higher absolute amount of profitability both on EBITDA and PAT side. I had earlier also said that at some point in time, then the capacity catch up will happen with in this business. The margins will come down, but our new capacity expansions and the revenues will actually compensate us to ensure that our absolute numbers on the profitability remains intact. And I think over the next couple of years we will see more instances of those things happening as the market stabilize, as the higher margins in the PET or the BOPP industry are normalized with the new expansions, with the new capacities coming in. So that has been the whole objective. Our innovation is not a substitute for the capacity expansion, and also the vice versa. Innovation is a constant thing that we keep on doing.
And see, in case of BOPP, for example, other than Tetra Pak, are you the only people other than Tetra Pak in the Indian market?
BOPP?
Not BOPP, aseptic packaging, yeah, sorry.
Yeah, we are the only two manufacturers, Tetra Pak and ourselves, in the India market. There are other people who import it from China also.
So as there are two manufacturers, is the margin higher in aseptic packaging than in other packaging?
Yeah, currently the margins in aseptic packaging are much better as compared to the flexible packaging.
Okay. And your capacity is being doubled, for example, 3.5 billion to 7 billion, which is 700 crores.
Yeah.
When do you hope to attain, say, 80-90% capacity of the expanded? I mean, it is coming on stream probably end of this fiscal, right?
Might take about 12 to 24 months time.
From now, which is next September?
No, after it comes into play.
Oh, after it comes into production. It's coming in production when?
Should be in the next fiscal.
Early or later? I mean, June
early.
June quarter.
Yeah.
Okay. And my last question is on your debt profile. See, your debt is right around 3,165 crores, as you said, term debt. I mean, how do you see it at the year end, and how do you see it at the end of next year?
I think we would generally have, if I'm not correct, we would generally have about 500 crores of repayment each year. 400 crores, 450 crores kind of a repayment each year.
400 to 500 crores, which is roughly equivalent to your depreciation, right?
Yeah.
Okay. Thank you.
Okay.
Thank you. The next question is from the line of Kamaljeet, individual investor. Please go ahead.
Yes, sir. Thanks for taking my call. So my question is related to what is the plant utilization right now on year to half year basis in the sense of last year to as on date?
Come again?
So what is the plant utilization in India-based plants as well as overseas plants?
So as I said, all are at 100% except Nigeria, which was at about 70% last quarter.
Okay. And in last year also in the same period, what was the plant utilization capacity was there?
I don't have that number before me.
Okay. And sir, so your inventory versus your sales, at what level management will be comfortable in the sense of as inventory has been increased and you are taking proactive steps?
So inventory increases because of the increase in the price level. Okay. It's not because of increase in tonnage at all.
Okay. So like even though plant is 100% in use and we are increasing the inventory level.
No, see, when the plant is utilized more, obviously your inventory level for the WIP as well as for the raw material, for the WIP and also for the finished goods and also receivables, everything will get inflated, no? Because then you are utilizing the plant to the maximum, so you need more raw material, you need more finished stock, and you need more customer receivables. So everything sort of is expected to go up when you are operating the plant at the higher level. But as I said that the incremental working capital deployment in this quarter has been mainly on account of the raw material price increase, which affects everything. Even your receivables will go up, no? Because the price rise will impact your receivables also. But as I said, that net impact of that increase has been less than 100 crores for us.
Okay. Sir, my next question too is regarding how much we are spending on the R&D expenditure.
Again, a question to be taken offline.
Okay. And any patent in queue right now, or it is already taken?
Nothing. I think we'll announce to the markets as and when it happens. Very difficult to give any premature information now. Even if we are working on some of those things, I think still very difficult to share on this.
Sir, what management strategic view from market valuation of the company? There are good products of the company, but a market still not giving the valuation what is required to be. So what management doing at strategic level? What is marketing or anything or any discussion with the investor community? What are the steps management is taking care of?
So we are busy in ensuring that we are the most efficient player in the market to run the business. We feel that it's for the market forces to take note of this, that how is our performance and our as in comparison to the other peers. Take note of that and then find opportunities. Either find opportunities in us or some other competitors. I think we've left it to the market forces largely to take care of that. Yes, as we told you, on a governance side, now we have, for the last 3 years, EY as our internal auditor. Now BDO is our statutory auditor, joint statutory auditor also. So from our side, whatever we can do in terms of a better governance, we doing that, coupled with our performance on the business side. Rest is, for the market to take note of that. And I think, in the last 1 year as such, 1.5 years, we've done reasonably well in terms of the stock price performance. Still not happy with the level at which the stock is, and the multiples are still much lower. But I think it's up to you guys to have faith in us and stay invested, and even look at allocating more to an industry leader, which is not which is the global industry. We are a global industry leader, not only a local or a regional industry leader. So I think once you're doing the things the right way, I think the world will find you, and give value at some point in time, which has happened partially in the last year and a half, but will happen much better in the few years to come.
Okay, sir. Sir, like power and fuel the cost has been increased 20 to 30%. So it is only India related, like increase in cost, or it is a globally?
No, it is globally also. The costs are increasing everywhere. So we doing whatever we could do. We are doing to take care of that. In Mexico, we've now recently started our own captive plant. In Russia also, now we've started our own captive power generation. So obviously these things will come handy in terms of the cost. But, in some of the other jurisdictions, it may not be possible to, sort of do that. So we'll have to then take that into our stride. But yes, the impact of the shipping and the energy costs has been not only in India, but globally also.
Okay. Sir, in last 2 years, last year as well as this year, whatever the annual report you have released, some accounting parameter, the format has been changed in the sense of might be some, it seems to be that some consultancy has been taken, some rent mechanisms on basis organization is working. So may I get some input on it in your annual report?
I've not understood your question.
Okay. The format of the accounting statements in your annual reports since last 2 years, it has been changed from the previous one in the sense of.
I'm not too sure of that. Why is that? Unless that is statutorily required.
Okay. Thank you, sir. Thanks.
Okay.
Thank you. The next question is from the line of Chirag Singhal from First Water Capital. Please go ahead.
Thanks for the opportunity. First of all, congratulations, sir, on the faster ramp-up of all the expansions. It's really commendable to see the production numbers. Now, the first question is on the status of the ongoing expansion, which is the Asepto.
I'm just like to make one correction here. The Nigeria capacity level was not 70%, but it is 56%. Sorry for this.
56 you mean currently or for Q2?
For Q2.
Okay, and current capacity utilization?
I think should be around 77, 75, 77.
Okay. So, So on the Asepto and Dubai and Dharwad, so what are the tentative start dates for all the 3 expansions?
I don't remember as of now, but I think next around the same time next year we should have Dharwad up and running. I think aseptic will be commencement of the next fiscal. That's it.
And Dubai line?
Yeah, that is same, announced at almost at the same time as India, so it takes the same amount of time.
Okay. Now, so coming to the production numbers, we recorded a production of 125,000 tons approximately, and we sold close to 122,000 tons of packaging films during the quarter. Now, I was just trying to reconcile this with the the production across all our plants, given that we are running at full capacity, including the expansions. So just wanted to understand that this 122,000 odd tons of sales volume, does this include the entire film sales of India, or this excludes the captive consumption and only includes the the external sales?
No, whatever sales number we are reporting, they are only external sales.
Okay. No, so then then I'm getting a difference. So if I take like 100% capacity utilization for all the plants, for all the rated capacity, and slightly higher for US, Mexico, and Poland, because we are running at more than 100% in those three plants. So total comes a little lower than the sales volume. So did we have some sort of an inventory sales in the quarter, like the production that we would have done in the previous quarter and sold in the current quarter?
ये offline कर लेंगे reconciliation. Our team can help you with that answering. But whatever the sales numbers are reported, revenue is reported 3,000 crore. That is net of. That is not captive sales.
Correct. I was just asking on the volumes front. Okay, no worries. I'll take it offline. Now, coming to the the increase in raw material prices. So you gave a detailed explanation on how things pan out and the time lag that happens for the pass through. So in the current quarter, how are you seeing spreads? Are you seeing that the spreads are better than the previous quarter? Are we able to
last quarter se much better? Last quarter se better hai spreads.
After the current quarter, okay. So we are able to sort of pass through the increase in raw material prices by taking price hikes in the BOPET films.
I think last quarter se abhi tak
so far, right?
So far it is a better environment across all the businesses, not only India but across all the businesses.
Okay, understood. So one last thing on the the specialty side. So like a domestic peers, let's say Cosmo. So they kind of give the split between the specialty and the commodity. Similarly, when Polyplex is giving the split between the specialty and commodity. So just wanted to understand, at least for the past 2-3 quarters, what is the likely trend we are having in terms of the split between specialty and commodity, and what is the target that we have set internally? Because now we have broad base.
I think we'll have to take this also offline in terms of the specialty and commodity split. So.
Okay, all right. That's it from my side. Happy Diwali, sir. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Saurabh Sharma, individual investor. Please go ahead.
Yes, hello, sir. So my question was about the selling price per se of BOPET films. So the selling price would have gone up after the end of the September quarter, right?
Yeah, you're right.
Yeah. So okay. Right. All right. So okay. So sir, in the sense of, the strategy of the company would be to sell out maximum production, or would it be to sort of produce most efficiently so that the margin is maximized? So would it be volume-led growth that the company is looking at right now, or would that be EBITDA accretive growth?
No, but how is one different from the other? Are you saying by producing?
Because your EBITDA, because even though your volumes have increased this quarter, even though your volumes have increased this quarter, your EBITDA has reduced. So there are ways of balancing the two out. There are ways in which you can reduce your just like you said you have done for your packaging business in India, where you said Huhtamaki, of course, has posted a loss, and that probably is because they are doing all kinds of business. They are not differentiating between EBITDA accretive business or EBITDA destructive business. That is what I'm trying to understand.
You see, I can only tell you one thing. I may have understood your question only partially, but I can only tell you one thing, that when we look at our business, whether packaging or packaging films, we don't want to cater to the market, which is where there are no margins. So we happy to leave some of the business, some of the SKUs which can be done by a much smaller company, because they can obviously do better than us as compared to a large player like us, where the cost structure is different from that. So even in case of our packaging, aseptic packaging, we took more time in terms of achieving the full productivity, because what we didn't do was to cut price and get the market, penetrate into the customer, and then look at raising the prices. The entry le lo, or uske baad mein we'll see. Some of the other businesses have that tendency. So once but clearly we are not into that kind of mindset at all, that you have to do the plant utilization at the highest level under whatever the situation is. Yes, the market dynamics for our expansion capacity when it came into being were changed, and I had earlier also said that probably the kind of operating levels of these plants that we see, probably even the management had thought that it will take a much longer time, but the market dynamics are such that it has happened early. So but as a management philosophy, we are not ready to sell our product cheap. And if there are markets, if there are other players where we see structurally it is not possible to service that particular SKUs just because others are able to do it more cost effectively, we simply get out of that and let others do that. Because otherwise then it's a bloodbath, and we don't want to get into that kind of stuff.
So, sir, what would you attribute the fact that BOPP film prices have increased, but BOPET film prices have not?
Okay, so there the raw material has played a spoilsport there. So the polymer, homopolymer has been in short supply. So because of the raw material scarcity, the price ramp up there has been a faster one.
I'm not sure I understand, sir, because BOPET resin prices have also increased.
Yeah, but if you see the PET prices only increased substantially, recently, while the BOPP is now about a 6 months old story that the raw material availability is becoming a bit of a challenge for the players.
Right. So okay. So in terms of BOPP prices,
while because of our raw material better management, so maybe that's another reason that we were able to populate those plants fairly quickly.
Okay. I'm not sure. What role did raw materials play in populating the plants quickly?
So let's say a player who is not able to procure it, and that happens to a lot of smaller companies who are one plant play, and they don't have the global reach to source their raw material.
Okay. So
scarcity, then those are the companies who are then not able to sort of procure very, very.
Okay. All right. So after the quarter end, in October month, have BOPP prices have increased also, or the difference between BOPP increase and BOPET increase, if you can comment on that?
So in this quarter, the raw material price of BOPP has rather come down. BOPP price, the BOPET raw material prices have increased on a sequential quarter basis. But the BOPP raw material prices have been lower this quarter as
and film prices for BOPP and BOPET?
Film prices for BOPP and BOPET.
BOPET
prices have gone up in Q2 over Q1, while the BOPP prices are marginally down as compared to the sequential quarter.
Okay. And so just to clarify, I believe to Mr. Singhal's question, I believe he was not taking into account the packaging sales from India, which are close to around 20,000 tons per quarter. So that is why there might be a discrepancy of 120 or 1,000 that he's saying, and 140 odd that we're doing in sales. So that might explain the discrepancy. All right. Thank you, sir.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Yusuf Nasrullah for closing comments. Thank you, and over to you, sir.
Thank you, everyone, for joining us today, and we look forward to staying in touch in future quarters. Have a nice day, and wish you all a very happy New Year.
Thank you, sir, and enjoy your festival. Thank you.